All right, welcome everybody. It's Doug here with the LincolnList.com, and this is the stock market review for the week of the 26th. I hope you are enjoying this extended weekend, taking the opportunity to get a little RR and possibly enjoy the nice weather wherever you are at around this world. So let's get down to business, talk about some stocks, stuff we might see this week, and what I think might happen. And I tell you what, I would just like to see a little bit of action. This last week was all melt up and grinding. Yes, when you look at it from a number standpoint, you see new highs in the market. If you were reading the front page of the paper, you would think, hell, man, everybody's just banking, the market's just ripping. But the internals this week were just slow, and that's understandable. You're going into a long weekend. It happens like this sometimes. So I think rather than just focus on the SPY or the market overall, I don't care if we go up or down. I would like to see a little more volatility because it's these melt up slow trendy days that day traders, they just don't like. Now if you're swinging positions or you're long-term trading, that could be a benefit, but for day traders that sometimes creates a bunch of intraday stubbornness, which we don't like. Now, this has created what I think is some great opportunities. Let me kind of reverse before I get back into that. Just going to touch on it real quickly. We look like we might continue to go a little bit higher. I wouldn't worry about any kind of big correction or big sell-off until we start moving over to some of these moving averages, 209, and even back down to 206. A little bit away, but anything can happen. As I said, rather see a little bit more volatility. Now, let me jump back forward. Talk about a few stocks here. The China names have been nutty, and that's okay because every so often that's what China names do. They get crazy. I mean, it's not the first time we've ever seen these names run, and it won't be the last. The thing about these is they're very, I don't even know what the word I'm looking for, but they do the same things over and over again. So what you saw maybe last year, 2 years ago, 5 years ago, you're probably seeing the same thing again. They'll get momentum, they'll get a bunch of price targets, they'll get a bunch of upgrades, and then they'll end up giving all that back in most cases. Now, when those events happen, and the timing of those events is what makes traders rich, right? Mistiming them is what makes you go broke. So talking about YOKU has got to be pushed up to the top of the list here as a potential short. As I said, we saw so much grinding and so much just continual trending that this thing just found, high after high. And it was, I was pretty surprised of the Momo myself on Friday. And I took a couple shots short. I kind of washed out on that trade, didn't get anywhere, but I'll really be looking a little bit more on Tuesday to take advantage of this. One reason is if you look at the price, I know there was a lot of 35 option calls that were bought on Friday that got everybody all stoked. And maybe we see 35. But when you look at this stock, you're talking about something at the beginning of the April was 12 bucks. We're up over 30, so you're looking at well over 100% gain in such a short period of time. The second thing is technically 85 to 86 RSI here on the daily. Very overbought, but we have seen things get to 90, so I'm not out overruling that. I think what you get here are two scenarios. The first scenario will be everybody jumping on board in fear of missing the rally on Monday, and you see this thing attempt a 33-34 hit, maybe up towards that 35. If it does that straight and you get some serious parabolic like you did on Thursday, then that's the short setup I think that would be the best. Now I want you to look a little bit closer on my intraday chart because there was a little bit, it looks like a parabolic on Friday, but actually it was just a little trickery. If you see the first red bar, and I talk about this a lot in the list, and I want people to understand this, and it's tough with Momo stocks, please don't do this. You start to see a little bit red, the thing gaps down, it's down 80 cents, starts out the day flushing down into this. This is a short trap. Never chase the reds on a momentum stock. Never do that. You've got to pick your points after the parabolics, or you have to find well-defined stop loss areas to make these trades. They do this a lot in the morning. I say market makers or whatever. The tricks they play, they show a little bit of red, so everybody says, hey, this thing's up a lot. They say a little bit red. They just get ahead of themselves, start driving in shorts, and the next thing you know, the next bar comes back, pow, all gone. Takes it right back, and the thing just starts ripping on everybody. And all this creates momentum, plus a short squeeze, and there you go. Stock starts ripping. So do not do that. If we get that move, do not short it. If you start gapping down 29.85s or you get a little bit of a pull, do not make your short decision first thing in the morning. Wait for that thing to come back up. It will pop. Trust me. It's just not going to keep. If it does go down, it'd be 1 in a million. You never know. But I wouldn't do that. I would just sit on the sidelines, wait for the bounce, and then reassess after the bounce what the stock is telling you, if it's got a little bit more high to it or if it's going to pull in. So two ways to look at that. Actually, I would probably be more of a buyer if it were to gap down $1.50 to $2. I'd probably go in on a low RSI buy on this thing rather than a short. So, Yoku, I'm going to keep this one on top of the list. Maybe it's not Tuesday, maybe not Wednesday, but I think sometime during the week you're going to see a really good pullback in this name on Yoku. Now, speaking of China names, I'm going to go back and visit somebody I haven't seen on my watch list in about a century, it feels like, and that's good old BITA. And I think as they make the cycle, you might start to see some of these get a little bit more push. But when we look at the daily chart here on BITA, this is a lot nicer than a Yoku. Like, you look at a Yoku, it's all parabolic. Here, this is a former runner, but we're looking at a really good, ascending wedge chart here. Nice little area of a breakout and such. So I do like this one, and I'm a little bit more interested in this one to the long side, especially if it breaks up over top of this area here, the 65, let's say 67s. Get up here a little bit, 65.20, 65.30, somewhere in that area. Excuse me, that's 65.30. I don't know where I came up with 67. Ignore that, 65.30. I wouldn't do that. Just as a reminder, what we talked about Yoku, I wouldn't do this thing first thing in the morning if it was strong. Don't do that. You don't want to chase it into that. A lot of times these stocks, it's very important that you buying, shorting, whatever you're doing, is that your execution price is a big part of your success. And I'm sure we all can think of several situations where we rushed a trade and it turned out to be a loser. And if we just had 10 cents more or 20 cents more room, we could have made a lot more money. So we want to be very cautious about that. And when you get the first 5 minutes of trading, there's a lot of emotions that are bottled up into that time frame. So you see some stuff that might not stick. Example, you see Yoku diving on Friday. So the first thought for a lot of people is, this is the day it's going to go down. This is the day it's going to close red. And they make those decisions only to see 5 minutes later they lost money and they're stopped out. Or the thing just rips on them and they're just standing there like a deer in headlight getting smoked. So don't do this with BITA. I would like to see a pullback. If it gaps up, I probably wouldn't long it. I would have to see this thing settle in for 20 to 30 minutes before making it. I'm interested in longing, but I think it has to do a little bit more here because I'm not interested here close to 65. It would have to come back in a little bit, build a base, and then perk. But it is one to kind of watch moving forward. Same thing could be said here for ADXS. This thing looks like it's back to breaking out here. This is a pretty big move. The real buy for this, or the smart buy, was down here at the 2030s. Now you've already had a nice breakout and a pretty legitimate run, but you're coming close to a resistance area here that might be of interest. I like these kind of charts for this reason and this reason only. Usually when I come up here, you're just kind of, you're stuck in the middle of nowhere, like no trader's land. You're up here, it's too far away from the last breakout, and it's kind of close to the highs. I know it's in a bullish movement, but you're very, very close to the highs here of 2470. I like these if they set up well, because sometimes they'll gap and run right into that. Now, if you can get, like I said, what I say now on these lists, sometimes certain things have to happen. It just can't hit a certain price. You have to have that chart set up. You have to have that movement, or what you're particularly looking for, not just your price, but that setup. And the setup is, if you gap or you go parabolic or you get strong momentum that carries you into this high, there could be a really good opportunity to take advantage of a short into that number. That would put you in a very low risk trade if you use a stop. Is if you get up towards there, put the stop at all-time highs, and then see if you could just capture pullbacks or just brief pauses in the momentum of this stock. It would be pretty good. Now, if you do something like that for any strong stock, you're going to short it. If you get into a short and you see very little itty-bitty pullbacks, or the pullbacks only last for 10 minutes and it's immediately bought up, the candles that drop are immediately bought back up. You got to get out of that trade, because if you can see the internals that the stock is getting bought up on the pullbacks quickly and viciously, then those stocks usually go a lot higher. So rather than get squeezed, it's best to just get out for whatever you can and wait for it to set back up again. But I like this one, especially if it carries us into that number. I like that as a short. Again, it has to do that. Last, I'm going to throw up some DY here. This is nice. I mean, it's a good looking short setup here. You got a little bit of a wick, a little bit of resistance there. You got 76 RSI on the daily. Certainly not super overbought, but a good price gap. You know, you were talking about a $46 stock, now pushing close to 60. This is what I'm talking about, the textbook para move on a stock that's been running up. Same thing we're looking at a YOKU, ADXS, or any of these. This is what you want. You want that thing to take off early like this. This is a 5-minute chart up here. You want it to take off early. Go parabolic, and as soon as you get some reds, just a little bit of red, rather than chasing the stock, that's what you want to do. You want to get a little bit of red, and then you want to go in short, because you can get in right up in here. You can place the stop slightly above high a day. That gives you a very low risk, and then just kind of let it roll over. Now, sometimes they won't. They'll just turn around and flag and then rip again. Those are the ones I said you got to get out of. But oftentimes, you get a nice little move like this. You can trail your stop down. This was a big move going from 60 all the way down to 58, and then just kind of reassess. So, you know, you can always get short like right in there. Get a little bit of red, maybe a little bit higher. Stop right up there. Let the trade kind of work for you. If it doesn't work, no harm, because you're not like getting smoked. Then you just keep trying it again. If it rips again, do it again, and on and on and on. So anyway, that's all I have. I went probably a little bit over time just talking and ranting. But anyway, if you guys need help with your trading, you're struggling, or you're finding it frustrating, take a moment, visit the lincolnlist.com. It's a 14-day free trial. It doesn't cost you anything, and you will learn something. I guarantee. Don't say I will make you rich, but I will show you something that you haven't seen, and I will make you learn something, and I will entertain you in the process and keep your mundane slow days. I will inject some excitement into it. So visit the lincolnlist.com, take a 14-day free trial. Other than that, thanks for watching the weekend video recap. Have a great weekend. Finish it off nice. Finish the month off nice this week. Take care of yourself.